Okay, hi there, welcome to an extension video. In a previous video we looked at the Phillips curve. This time we're going to take it further and look at the concept of the NAIRU. So this is an acronym, NAIRU, N-A-I-R-U. What is meant by this term? Well, it stands for the non-accelerating inflation rate of unemployment. Essentially, in basic terms, it's the rate of unemployment below which inflation, the rate of change of consumer prices, might be expected to start accelerating significantly. So here's our original short one, Phillips curve, and we covered this and shifts in the curve in a previous video. Just check out the Phillips curve on our YouTube channel. So this is a non-linear relationship between unemployment and inflation, and there is a point as unemployment falls. Initially, inflationary pressures are low. So, for example, from U1 to U2, you can cut unemployment quite sharply without there being a big rise in inflation. But eventually, at some point, if unemployment falls further in the economy, strong labour market, rising demand for labour, unemployment falling, then the rate of inflation might start to pick up. And the NAIRU concept is basically the idea, and it's not necessarily a single rate of unemployment, but it's the rate of unemployment when the Phillips curve essentially becomes inelastic. Below U3, there is the risk of accelerating inflation, heading up, 3, 4, 5, 6% or even higher. So the NAIRU is the idea that there's a rate of unemployment which is essentially an equilibrium. Below it, inflation really does start to pick up, if that makes sense. So what factors in the UK economy and in the labour market in particular might influence the NAIRU? Well, there are many factors. Let me just pick out 4 for you. I think really important to understand that wage inflation, how fast wages and earnings are going up, is in large part the result of a bargaining situation between employer and employees. So the relative wage bargaining power of workers, perhaps their unions if they belong to a union, is significant. Unions, of course, bargain on behalf of their members. And the term we use for that is collective bargaining power. Now, on the one hand, in 2022, we know that there have been some significant labour shortages in many different industries. Car making, health and social care, construction, logistics, the old lorry drivers issue, software engineers. When there were big labour shortages, the balance of power in this sort of wage bargaining process, the balance of power tilts towards workers because workers are in scarce supply. On the other hand, in the long run, we have seen a big fall in unionisation. As of 2022, less than 1 in 4 people in the UK were or are members of a trade union. It's only 23%. And we've also seen the rise of dominant employers with so-called monopsony power. So this fall in unionisation and the rise of monopsony employers has tilted the balance of bargaining power towards the firm, towards the business, the employer. So it's quite interesting that this relative bargaining power can move around quite a bit. The NAIRU is also influenced by structural unemployment. So, how many people are out of work, wanting to work, but don't work because of the barriers to getting back into a job. So when the structural unemployment rate is high, then the NAIRU tends to be high because labour shortages kick in at higher rates of unemployment. And structural unemployment is influenced by many factors, including the skills gaps, the skills mismatch between the skills that the unemployed have and those that the new jobs require. Very high childcare costs can be a major barrier to finding work, causing structural unemployment, as also things like transport costs, the cost of commuting to and from your place of work can impede the geographical mobility of labour. So when structural unemployment is high, the NAIRU tends to be high, below which inflation starts to pick up. Globalisation, a macroeconomic factor, an international factor, can have an effect. You see when you have a wave of globalisation, increasing foreign direct investment, open trade, the pricing power of domestic businesses tends to fall because the markets are opening up. And if businesses have less pricing power, then they may be less able to pass on wage increases in the form of higher prices. So you may be able to get unemployment down without causing inflation. And critically, and this is super important, the impact of flows of migrant workers into the UK. So we know that skills shortages, labour shortages, tend to drive up wage inflation. While migrant flows, of course, particularly inward migration of skilled workers, can help to ease those problems, create more jobs, create growth in the economy without causing inflation. So you might want to take a screenshot of this, or if you're making revision notes, here are some of the factors that influence the NAIRU in the UK economy. I just want to talk about a little bit about what can happen if you can improve that situation. There's an initial short-run Phillips curve, SRPC1, with an estimated NAIRU of U1, whatever that happens to be. Let's say it's 5% of the labour force. So below U1, the scene is set, if you like, for accelerating inflation. Now, what you might want to do through supply-side policies, for example, making the labour market more efficient, more flexible, improving skills, improving productivity, and reducing immobility of labour, is shift the Phillips curve and flatten it. So flattening the Phillips curve is the idea that you can bring unemployment down while still keeping inflation at more or less the same rate. So what I've drawn here is a flatter Phillips curve. The NAIRU happens at a lower rate of unemployment, U2 instead of U1. Can you see there? So at the same rate of inflation, I1, we can hopefully get unemployment down from U1 to U2. This is a really important concept to use if you're talking about supply-side policies and trying to improve the potential trade-off between unemployment and inflation. If you can get the NAIRU down, you can shift it to the left by flattening the Phillips curve, you can achieve lower unemployment without triggering an acceleration in inflation. So this is super important. And I think that the reality is that we have made progress. Unemployment, in the peak in unemployment in each of the last 3 recessions has been lower each time. So we are successfully managing now to avoid those huge rates of unemployment that's typically associated with an economic recession. Progress has been made in the UK in making the labour market more flexible and addressing some of the barriers to people finding work. It's impossible to tell what the NAIRU is. It's probably around 4 to 5% of the labour force. But that said, in evaluation, there are still important, significant barriers to getting unemployment down in a way that does not create inflationary pressure. High rental costs are significant, the cost of childcare, and also, in fact, many persistently low wages in many sectors can lead to something called the unemployment trap. People might have the right skills to take work, but they simply cannot afford to work. For the relative wages are low, the cost of commuting is high, the cost of finding childcare is disproportionate, and the unemployment trap is a major barrier to people actually taking that job which might help grow the economy. So there we go. This is an extension video. If you've looked at the 2 videos together, the Phillips curve and the NAIRU together, hopefully this will be a useful bit of analysis and evaluation for your exams. If you have found it useful, I'd love it if you gave it a like. That would be fantastic. Thank you. Either way, stay happy, stay curious, stay healthy, and see you sometime soon.